Inconsistent candle patterns, crashing prices, asset liquidation, and dwindling wallet values are the sad reality that most crypto investors endured during a market crash. Nevertheless, a handful of other investors are still able to squeeze out the profit juice even during the occasional unavoidable crypto droughts. How do they do it? Today, we'll be revealing the secrets to making money from the next crypto market crash. But before we do that, we'll be talking about how to prepare yourself for the volatile season. And at the tail end of this video, we'll explain the best crypto trading strategies to adopt during the next crypto market crash. If you don't mind, let's get down to business. The crypto environment is a very volatile realm where profit can quickly turn into a loss and losses can rebound to become a fortune, all within the blink of an eye. While the crypto market ended 2021 with a loud bang, it has disappointedly started 2022 on the back foot. Some say the market is experiencing a period of consolidation, and as usual, the dedicated naysayers have gone back to doing what they know how to do best, predicting a total collapse of the market. It shouldn't cause you to lose any sleep though, because we all know it's not going to happen. The unprecedented leader of the crypto pack, Bitcoin shed up to 40% of its gains occurred last year. Other supporting casts, such as Ethereum, ADA, and Solana simultaneously followed this trend, which led to a sharp, significant drop in the combined market cap and a contrasting rise in the number of forced liquidations of leveraged positions worth hundreds of millions of dollars. While this decline was in full swing, you had the lucky few who came into the downturn well prepared. Those lots were able to generate tangible income from the depressed market. How do they do it? Making money from a crypto market crash isn't rocket science. Actually, it's not any more difficult than losing money during a crash. The first and most important thing you want to do during a crash is to find calm in the chaos. We'd imagine there'd be a lot of FOMO flying around and people asking endless questions like how long will the downturn last and if the market will survive the squash. Emotions are also at their peak at moments like this, ultimately adding in the dilemma of investors. Don't get caught up in all these negative frenzies and doubts. As much as you can, keep a calm head and clear your mind of all unnecessary emotions. Once this is sorted, seek premium information to solidify your knowledge and stance on the situation. Then, follow deploy methods that we are about to discuss to earn money through the dip. Before that though, please remember that the crypto market is a volatile playground. Do not invest more than you can lose. In the words of Greg King, founder and CEO of Osprey Funds, consider whether an 80% to 90% down move in your crypto holdings would cause you to lose sleep at night or sell. If the answer to either of those is yes, do not invest, King said. Always keep this in the back of your mind. And now on to our money-making methods. Number 1. Trade volatile coins for fiat currencies. The easiest way to safeguard your funds during a market crash is to swap your volatile tokens like Bitcoin, Ethereum, and Solana in exchange for dollar-backed tokens such as USDT or BUSD. Apart from preventing the value of your wallet, you'll also have a substantial bargaining power to tap into new opportunities and purchase new assets that are performing well. Simply put, while the volatility of the market controls the decision of other traders, you'll be able to decide when to enter a trade and when to exit. Number 2, buy the dip. Every crypto crash is a potential business opportunity to improve your fortunes, but it's not all that straightforward. You'll find that most of the tokens are selling for ridiculously dirt cheap prices. However, in a dip, nobody knows where the real bottom is. So you want to be extra careful, especially if you're making a short-term investment. In contrast, buying the deep and holding it for the long term will most likely land you in the profits. Number 3. Identify strong opportunities. Regardless of how severe the crypto market situation may be during a dip, there are always a few assets that stand out and head in the reverse direction. A good example is the Terra Luna token that has done relatively well despite the downturn. Number 4. Stick to the course. It might not sound logical, but sometimes to reap the rewards of a crypto crash, All you have to do is sit back and watch the entire market burn to the ground. Eventually, it will rise from the ruins and yield the desired results. However, it requires patience and a courageous heart. Number 5. Short the market. The truth is, not everyone would get rich by entering long positions. Besides, you don't want to be caught swimming against the tide. Most traders are usually caught unaware by a market crash. When this happens, many of them would rather wait for the market to recover before making new investments. But that's not a wise financial decision because there is always money to be made in the crypto market regardless of what day of the week it is. As soon as the signs of a downtrend begin to surface, you should start mapping out your strategy to short the market. The earlier you get in and out, the higher your chances of raking in profits. Right before we reveal the best crypto strategies to deploy during a crypto market crash, if you've made it this far, please make sure to like and subscribe to the channel for more content like this. Scalping. This is a trading technique that involves making profits from small price changes. However, it requires a strong exit strategy, absolute concentration, and special tools. Smaller moves are easier to come by, so the probability of making profits using the scalping strategy is relatively high. However, it is important to note that one huge loss can wipe out all of the small gains. So you've got to shut out the noise and stick to the plan. High frequency trading, or HFT. HFT is a complex trading system that employs the services of sophisticated computer programs, otherwise known as bots, to complete large trading orders within seconds. The decisions of these systems are made based on the specific market conditions. Once these conditions are met, the system triggers a particular trade at neck-breaking speeds. Do in-depth research. Whether you are a crypto guru or a newbie, research is an essential tool to add to your kit. If you are new to the market, get experts' opinions, read articles, and watch educational videos. Also, keep tabs with the latest news about the industry. Enter long-term trades. Long-term trades are less volatile than scalping and other short-term trading methods. The likelihood of getting liquidated is also significantly reduced. According to Greg King, CEO of Osprey Funds, the up moves and down moves can be breathtaking. Taking a long-term view puts these moves into perspective. Diversify your portfolio. Keep an eye on your portfolio to ensure it's not lopsided. Also, avoid buying too much of one token at a time. Instead, spread out your investments by purchasing small bits weekly or monthly. Avoid buying large amounts of cryptocurrency all in one shot. Jake Yokampiat, co-founder of Decred, said, "If you buy a whole bunch at once and the price drops, psychologically, that's very difficult for people." These aforementioned techniques are highly effective and will help you a lot when making profit during any crypto market crash. However, the decision of which method to deploy certainly rests on you, the investor. So as always, do your own research and consult your financial advisor if need be. Have you learned something new about the crypto market crash? Which one of these techniques will you be looking to deploy? Be sure to check out this video over here and subscribe to the channel for more content like this.